You mentioned regulation, which I think is the topic of the day. How have you seen regulation changed, and how does that impact your business or TradingView?
Yeah, so it's quite interesting. So obviously we went to FX Summit last year and the year before, and tried to bring some voice of reason, I think, for sure. So we talked a lot about how there are firms out there that are overnight success stories, but you really dig into, what do they do and how have they grown so fast? And oftentimes there's a lot of cutting corners,
question
if
marks.
you will. Question marks.
Yeah.
And so we most recently saw this in what's called funded trading programs and a lot of these challenges, if you will, where people come to the forefront. They basically say, hey, we will, take $100 from you, but then we'll allow you to enter these challenges. Potentially you'll make a bunch of money, potentially you won't, but the downside is, $100. So it's a good trade for an individual investor, right? Their downside's pretty limited, but their upside is essentially, well, maybe I could, start managing money or things like this. So this has been really popular in the future space here in the US, and then internationally, FX and CFDs have taken this very, very seriously. As you say, the turning point really has been around people starting to crack down a little more as to how these companies are funded, ultimately who owns the accounts, and there's a lot of people kind of growing up in the middle of the market, which is not so much the retail customer or the brokerage, but a lot of kind of service providers in the middle, and as a result, nobody's really kind of dug into that too aggressively until I think it was November of last year, which was like the Funded Next or something like that. There's a couple big firms that had very substantial brands, kind of grew up overnight, and we saw some takedown actions as well as I think enforcements across the board. So that does signal, I think, to me that there will be more eyes on the space for sure, because these businesses have grown so fast.
Yes.
But at the same time, honestly, creating competitions in simple terms, there's nothing absolutely wrong with it whatsoever. It just comes down to who are the players that are involved in actually, say, making markets behind the scenes, actually holding the accounts, right? Nobody really dug into that initially, and then turns out oftentimes you were wiring money offshore, and then that was supposed to be like actually kind of a normal thing to do, and in fact oftentimes you'd fund it in crypto, and then my head starts to spin a little bit, like, okay, well I'm pretty used to like connecting my bank account and then just having it be a wire transfer into a normal brokerage, and so I think thankfully people are waking up a little bit, which is generally good for the industry, because TradingView is a perfect example of a place that wants more education and not more regulation per se, but definitely, they want everybody to not, get burned by some kind of sketchy broker or something like that. So it's great for the business on our side. We obviously are restricted from working with a lot of these kind of prop trading firms and things like that. And so obviously people come to us every day and want to work with us. But we have to obviously draw a pretty clear line there for sure. Because
of course,
as you can imagine, it's, again, asymmetric downside. There's a lot of brokers, there's a lot of folks like us that really don't see kind of the risk paying off at the end of the day. It's too much risk. TradingView is a big business to deal with these kind of firms. Sure, there may be short-term money available, right? For sure. But at what cost, basically? So,
and I think that's the beauty of building something so big like TradingView, is that you're not going to be picking up pennies in the sand. You're not going to be chasing pennies in the sand and giving up the real opportunity, which is building the largest platform and an integrator.